A massive sell-off on Wall Street, its biggest retreat since the financial crisis.
I think investors in general are just very worried that we're headed for a recession, and they want to get out while the getting's good.
And they got out in droves. The Dow Industrials average plummeting 513 points. It was the single worst day for the market since December 2008. The sell-off, the ninth down day in the past 10 sessions. Wall Street had been heavily focused on the debt showdown during that time. Now that that's been dealt with, traders are coming to grips with the economy.
Now the market is refocusing on the bigger macro picture, which, by the way, all the reports were coming out negative while we were caught up in Washington, and the market was ignoring it, and now it's coming back and looking at those numbers saying it is not as bright and rosy as we thought.
The selling intensified as the session progressed, with the Standard & Poor's 500 index breaching what traders refer to as a key support level.
1350 on the S&P has been the one that everybody's been watching because that's sort of the low of the year previous to this day. And people thought when we got there, if we were indeed going to get there, and today we did, that we would find support. We really blasted right through it on the downside, so I think that that's sort of worrisome to people, where that level that might have been considered support is now probably going to become resistance. So I think that's a key technical issue.
Perhaps one bright spot in the session, depending on your view of things, it was oil. It fell 6% to $87 a barrel. That should bring down the cost of gasoline at the pump.
The implication would be that a lot of investors believe that demand for oil will lessen as the global economy probably goes through another soft patch.
The Dow's 4.3% drop to 11,384 has pushed the blue chip index into negative territory for the year. The S&P 500, a benchmark for most mutual funds, lost 60 points, or 4.8%, to 1,200. The Nasdaq also suffered, losing 137 points, or more than 5%, to 2,556. Mark Hamrick, Associated Press.
Missed a number big, big like last month. They were looking for 100,000, we got 18,000. That was a big miss. This month I think they're looking for 85,000 on the jobs creation. If you miss it small, I think you get a market rally actually. If you miss it big again, then I think all bets are off and we could test 1,200 on the S&P.